We're back for another episode of Market Structure. Now, if we look at the way the market worked out in the DJ, we could find again the lesson that trend is your friend. That cliche statement is important for trending markets, the bigger picture, the every other day move, the weekly move, the monthly move, that stuff will hold true. But there are moves within the day, very large moves, 50, 60, 90, 100, 150, 200 pips, a whole lot of money sitting right in front of you if you know how to structure your trades, if you know how to read market structure. This is the simplest but most effective for my trading. But for my style of trading, this is the simplest but most effective skill that I've been able to tack onto my trading. So when we look at it, we look at this GJ trade. With the GJ, we were in this downtrend, right? After a strong uptrend, taking this downtrend. Now I want you to notice first box, 149.675. Let me see if I can clear a picture here. 149.675, right? That's the first box. This picture was taken at on the 21st at 1915, so still within New York of yesterday, right? Trying to take this downtrend. 3 specific zones. The final zone was 149.035. After that, the sell was done in my mind, and we had to start looking to buy. Right now, in my mind, we have this area and possibly this area. Right now, we're somewhere under here. So marking something up doesn't necessarily mean you just pull the trigger. It's not a perfect science, as you can see. You have to wait. You have to wait for a settle out of the market. You have to wait for the market to tip its hand as to when it's finished moving in one particular direction. That's why, again, I love the GBP/JPY. I love it because it will expose your bad habits. Jumping the trade, not waiting for price, trying to get in the momentum of the market, all that good stuff. It will expose your bad habits. That's why it's one of my favorite pairs, and because it moves. So, again, 149.675, I marked this up. 149.425, I marked that up. And 149 flat, that was marked up as well. All right, so let's look how it worked out. So far 40 pips off that high, which is let's get rid of this. All right, so let's go back to the M15 chart so we can see how it worked out. Trade yesterday started here. All right, and then we got here, which was that first box. And then we got here, which was that second box. And then finally we reached that area, which we're under now. These are the general areas that I marked up on that chart, and we made it all the way down. Now, a couple of things to take note of. What started this trade? What made me say, okay, you know what? It's time to take this reversal after this strong uptrend. We look left. I'm doing it on a naked chart. So if you're a beginner, if you're one of the people who have just joined the trading program, my trading program, this may not make as much sense to you right now. But for those of you who've been around, this market structure stuff should be making some sense. Now, if we look at the way this has worked out, we're in a key area. If I pop on EMAs on here, we're in a key area, right? Intraday, today. All right, just like that. Okay, now here's the thing. The market doesn't lie, right? The market doesn't have any type of emotions. It's you. So when the market first got down here, to hit that first zone that we marked up and then popped up for 38 pips, you had 2 choices. To take the buy from somewhere down here, which would have been a mistake because on the H4, look at what happened. You've reached a critical high point. It caused this downtrend last time, all right? It caused the continuation of this downtrend last time from this price. You've now reached that price, right? You've now hit that price. So you can expect some sort of downtrend. Maybe not the whole thing, but some sort of downtrend. Something. right? It's not going to be easy for this thing to break this price because this price is important. Importance, right? It's an important price. If this breaks over, guess what? We're going up. So that's not going to happen easily, right? You're probably going to get a work of this area. All right, so right now you're stuck in between this critical price zone and this critical price zone. I move on. We've hit the H4, so we've hit a critical price that we can see on the H4. If you have Kazis, you could mark this up. If you have a sniper eye because you've built it over time, you can see it just by looking right here, right? So when we go to the lower frame to catch our timing, right, because lower frames are for timing, this is the trade that started, right? So we started here and we finally got down to this price zone, 63 pips, boom. Now, market works and works and works and retraces back up. So the first thing that I do when I'm trading is I take note of stuff like this. In my mind, I can see that this price for some reason is very important. So the first thing that I do is I take a Fibonacci line and I just draw it up just like that. Because for today, this is my high and this is my low. Just for today. So what I'm waiting for is if this 50 is going to hold or if I'm going to have to take an entry from the sweet spot. All right. Now market works and works and works and works. Finally gets back down here again, pops me up again for 20 something pips. So even if you're seeing this wrong, you're still possibly profitable. Right? And then it gets lower and lower and lower. Here's where you got to start paying attention. Another retracement, getting lower. Lower and lower and lower, and now we've hit that other critical zone. From that critical zone, what happens? 86 pips. So what I automatically do is I drag my Fibonacci. All right? Once it's up here, it is officially in the sweet spot. Because of all the selling power from this zone, you get this strong downtrend, 142 pips. But now we are in a buyer's zone, also negative 61 on the Fibonacci. This will not be easy for this thing to break down. So what do we need? We need to break back above and work structure on the way up now in order to get your uptrend. What are you probably going to get? A bounce around between this area. That's probably what you're going to get. My point, market structure doesn't lie. Now this looks really messy after the fact. Let me just do one of these. When you look at a naked chart, if I go to the H1, I'm going to see this clearly. I can see exactly what it is we should have been looking for the whole time. If I take this trend line, I just do one of these, right? That was the channel, right? This was the area that was holding. The zone that I marked up before was this one. All right. So what ended up happening was hit that zone, hit that trend line, hit that EMA, hit the God knows whatever indicator you use. A lot of buying power here, shoots this market back up, but then you start interacting with all the selling power here. Shoots this market back down. Now you're within a lot of buying power again. Now we wait. That's what we got to wait for. There's nothing else you can do. Point of this video is market structure is king. Price action is king. For me, for my trading style, for the success of students, for the Telegram where calls are made every single day, where students, were once former students, are now business partners, are also making big calls. For anyone who's ever done anything in this industry, they had to learn how to read the structure of a chart. And a lot of books and a lot of PDFs and video systems and all this other stuff glaze over price action. It's just part of the starter kit. It's a mistake. If you learn how to read the candles, price, structure, horizontal price, the reactions of markets in certain areas, how to draw your fibs, how to read your EMAs, how to draw your trend lines, you can find success in this industry. It's very, very possible. It's my opinion that if you focus on market structure and you really focus on your markups and the way the price is reacting off of every markup that you make, how accurate you are about the patience of your price, you will eventually find success in this industry. That is my opinion. So Once again, point of the video, market structure is king. I tell no lies. You can see it right in front of you, off the call in that group, off the way that things worked out, off the way the market is struggling currently. Learn your market structure. Take your time with your trades. Price will not do what you want it to do. Price is going to do what it wants to do. So you have to work with it. Happy trading.